Thanks for clicking. Canada's real estate market is being bought up more and more by real estate investors. This was the message coming from a new report released by Statistics Canada, showing that up to 41% of all housing is being held by real estate investors.
You mother.
With the average price of a house in Canada hitting over $816,000 in the month of March, this is definitely going to be disturbing news for a lot of first-time homebuyers. So what I want to do today is go over the report released by Stats Canada, compare it with a report released by the Bank of Canada in January, which show things might be even worse than StatsCan is letting on. And then I want to go over some of the steps being taken in the 22 budget to curb the increase in the amount of real estate investors gobbling up properties in the Canadian market. Cheap money encourages investment, and with the rise in interest rates that we've been seeing from the Bank of Canada, it looks like the era of cheap money in Canada is coming to an end. We're set to receive Canada's inflation data for the month of March next week, which will have a large impact on how high the Bank of Canada goes with its interest rate hikes in the coming months ahead. We'll obviously have updates out on that on this channel, but for now, let's get into the StatsCan report. The report just released by Stats Canada shows that between 2019 and 2020, multiple property owners accounted for 31% of all real estate in Ontario, 29% in BC, and 41% in Nova Scotia. In BC alone, 15% of property owners own 29% of the properties. Meanwhile, 22% of those in Nova Scotia own 41%. So for the past few years, we've heard that supply was the major driver of the continuing rise in real estate prices in Canada. It looks as though the real estate investors have definitely taken their fair share as well.
You think?
And remember, this report only looks at data between 2019 and 2020. So before the pandemic and just around the middle of the pandemic, I suppose. I'm not sure how we're gauging the various stages. But between 2019 and 2020. But when we compare this to a report issued by the Bank of Canada in January, showing that in 2019, real estate investors accounted for 19% of the real estate market. However, by 2021, that number had risen to 20.58%, with first-time homebuyers losing an almost equal share during those 2 years as well. So while the report from Stats Canada shows that real estate investors accounted for up to 41% of the property ownership in Canada during 2019 to 2020. When we compare that to the report issued by the Bank of Canada, we see that number has probably grown even higher in the past 2 years as well. So what, if anything, is being done about this? Canada's 2022 budget made headlines for its banning of foreign buyers for the next 2 years, but the budget also looks to create a financial disincentive to real estate investors from buying property just to flip it. Starting in January 2023, the budget promises to tax those who buy properties and sell them within the first 12 months. So this is meant to discourage those who are buying up properties, fixing them up, and selling them for a profit. So the idea would be to tax real estate investors who are buying up property not for the use of even rentals or not for the use of their own primary residence, but to be used just as a means of flipping. So we do see some measures, or at least this measure, coming down from the federal government to help to try to curb this speculative behavior. With that said, though, we did also receive a report this week showing that 1/3 of Liberal cabinet ministers are real estate investors themselves. I'm not sure if their own personal business interests get factored in to these cabinet meeting discussions, as I'm not often invited.
Well, that's f***ing bull.
It is, but that's definitely a conflict of interest. And this comes at a time when Finance Minister Chrystia Freeland is warning about the dangers of the financialization of Canada's real estate market. So 1/3 of cabinet ministers owning multiple properties, when the Finance Minister is warning of the dangers of owning multiple properties, of the financialization of Canada's real estate market, this definitely doesn't look that great.
Bad. It looks bad.
So while the government does appear to be going forward with its anti-flipping tax, we will probably have more on that in the next couple of months as the details are released. With that said, I think what really moved a lot of these real estate investors into the market was not only as a hedge against inflation, but also cheap money. We've talked about on this channel before how real estate investors are in it to make money.
The Benjamins.
And as the cost of borrowing goes up, there will be less and less money to be made. Further, if we do start to see real estate prices slow down, even if real estate prices just plateau, that will probably get some of the real estate investors out of the market. If you're a real estate investor, you're buying in the hopes that your investment is going to rise in price over the next few months. If you don't think that the price is going to rise over the next few months, then your incentive to get into the market is much, much lower, and maybe you'll park your money elsewhere. So, while it's no coincidence that we saw the major increase in real estate investors in the market come at a time when interest rates were ultra low, and that's just not the case anymore. So, while there had been talk about the government coming down with increased down payment rules for real estate investors, increased qualifications for real estate investors to get mortgages, that doesn't seem to be the case, but I'm not sure that it will need to be. The more and more these interest rates continue to rise, I think we're going to see real estate investors exit the market sooner rather than later, as it's just not financially viable for them to do it anymore with the cost of borrowing going up so much over the next couple of months and maybe years ahead. With that said, we'll obviously have updates out on the state of the Canadian real estate market going forward and whether or not these real estate investors continue to stay in the market despite the rise in interest rates. If you want to get those updates, make sure you click like and subscribe, and thanks so much for watching.